Hi, this is Rakesh and welcome to our new accounting video. And in this video, we are going to discuss journal entries at the time of admission of a partner when the new partner brings his share of goodwill in the firm. So at that time, what journal entries the firm will pass. So those journal entries we are going to discuss in this video. So I have taken one question here. So we will go through the question first and then one by one we will see the journal entries, right? And we will discuss the logic also behind each journal entry. So let's start the video. So here we have a question. The question says Srikant and Raman are partners in a firm sharing profits and losses in the ratio of 3:2. So it means there are two partners, Srikant and Raman. Already these two partners are existing in the firm and their profit sharing ratio is 3:2. Now what happened later? They admit Venkat into partnership with 1/3 share in the profits. And Venkat brings in rupees 30,000 as his capital. So new partner is going to admit in the firm for 1/3 share in profits, and the new partner is supposed to bring rupees 30,000 as his capital. So first let's see what journal entry will pass for this rupees 30,000. So dates are not given here, so I will be putting the serial number. First entry will be, so as he brought rupees 30,000 as his capital, so cash will increase in asset debit. So cash account debit, and we will credit Venkata's capital account. Venkat's capital account. Increase in asset debit and increase in capital credit, rupees 30,000. Right, and the narration will be capital brought in by the new partner. New partner Venkat. So this is the first journal entry. Now let's see further what happened. He also brings in the necessary amount for his share of goodwill. On the date of admission, the goodwill is valued at rupees 24,000. Right? So we will first solve the question till here. Now what is the valued goodwill? And his share in this valued goodwill we have to calculate. So 24,000 multiplied by his share in profits, that is 1/3. So 8,000. So he brought 8,000 rupees also for his share of goodwill, right? So what entry will be for this? So second entry will be again cash account debit, and we will credit what? To premium for goodwill. Premium for goodwill account. How much amount? Rupees 8,000. Right? So narration we can write cash brought in as goodwill, cash brought in by the new partner for his share of goodwill. So this is the English, right? Now he brought 8,000, we passed this entry for that, rupees 8,000. Now immediately we will pass one more entry. Now this 8,000 we will distribute between Srikant and Raman, the existing partners, old partners I mean to say, in their sacrifice ratio. because the new partner Venkat got his share 1/3, and this 1/3 share he got from Srikanth and Raman, right? They have sacrificed, right? So just to compensate that sacrifice, Venkat is bringing rupees 8,000. So we need to give credit in order to compensate the old partners, in order to compensate their sacrifice. Now we need to give credit to them. Whatever amount Venkat brought, now we need to give credit to the existing partners, the old partners, in their sacrifice ratio. And here nothing is mentioned. So we will assume that old partners, they have sacrificed in their old ratio, that is 3:2. So this 8,000 now I am going to divide between Srikanth and Raman, right, in their sacrifice ratio, that is 3:2. So for that, what I will do, I will debit the premium for Goodwill account. Premium for Goodwill account debit, right? And I will give credit to the old partners. The partners are those who have sacrificed. So here we have Srikanth's capital account. First partner is Srikanth, so I will credit Srikanth's capital account, and then we have Raman's capital account, right? And amount is rupees 8,000, and this I will allocate in the sacrifice ratio, that is 3:2. So 8,000 multiplied by 3 divided by 5. So Srikanth's capital account I will credit by rupees 4,800, and the remaining amount I will give to whom? To Raman. I will transfer to Raman's capital account, 3,200. Done. Now my logic is what? This money is brought in by Venkat, right? So here see, this capital brought in by Venkat. So what I did, I debited cash and then credited Venkat's capital account, right? This amount is also brought by Venkat only. So I debited cash account, but I didn't credit Venkat's capital account. Now the reason why, his capital account will be credited in future. Whenever firm, this goodwill, this 24,000 is what? Goodwill amount. And this is the extra profit firm will earn in future because of goodwill. So, right? So in that, this 24,000 firm will earn in future. So when firm will earn in future, definitely this 24,000 the firm will distribute. When the firm will distribute this 24,000, definitely at that time what will happen? Venkat's capital account will credit. And when I will credit Venkat's capital account, in that scenario what will happen? The capital account of Srikanth and Raman will be credited with less amount. That is going to happen. So that's why, to compensate Srikanth and Raman, what I have done, I have credited their capital account right away, because in future they will be getting less share in the profits. And why they will be getting less share in profits? Because now Venkat will be also sharing in this 24,000, though he is not eligible to participate in this 24,000, but he will be getting 8,000. So at that time, in future, what I will do, I will credit Venkat's capital account by rupees 8,000. So when I will credit Venkat's capital account, so definitely Srikanth and Raman capital account will be credited with less amount, right? So they will be sacrificing, they will be losing the profits. So that's why we need to compensate them right away. Got it? So this is the reason behind, this is the logic behind this distribution of this 8,000 between Srikanth and Raman. Now what narration we will write? Amount of goodwill credited to old partners in sacrifice ratio. Done. Right? So we have passed these three entries. First entry is for the capital brought in by Venkat. Second entry, the money brought in by Venkat for his share of goodwill. And in third entry what we have done, we have credited the old partner's capital account, the partners, those who have sacrificed for the new partner. So we have credited their capital account, and we have distributed that rupees 8,000 between Srikanth and Raman in their sacrifice ratio, that is 3:2. Right? Now let's see further. Now see what given. And the goodwill account appears in the book at rupees 12,000. It means there is already existing goodwill in balance sheet. Goodwill account is already appearing. So, and as per accounting standard 26, what we are supposed to do, firm is not allowed to show the self-generated goodwill in its records. So we will assume that this is the self-generated goodwill. So now we need to write off this goodwill. So we need to pass one more entry. So for that, see what entry I am going to pass. Now goodwill, we know that goodwill is asset. Assets are always debited, right? Now to write off the asset, what we will do, we will credit the asset account. So to goodwill account, right? This is the existing goodwill. How much money? 12,000. Now when the goodwill we will write off, definitely there will be loss, because asset is going from the records, right? We are removing the asset. So when we will remove the asset, there will be loss. And who will bear that loss? The existing partner, Srikanth and Raman. So what I will do here, I will debit their capital account to be, because they need to bear this loss. So I will debit Srikanth's capital account in their old ratio, and then I will debit Raman's capital account, right? Now let's see what will be the amount. 12,000 they will bear in their old ratio, that is 3:2. So 3 divided by 5. So Srikanth will bear 7,200, and how much Raman will bear? 12,000 multiplied by 2 by 5, 4,200. Otherwise we can do what we can do, from this 12,000 subtract this 7,200. We will get the amount what Raman has to bear, the loss 4,800, right? So these are the entries. What will be the narration? So goodwill account written off. So this will be the narration, right? So I hope you guys understood these journal entries, right? Okay, see you in the next video. Till then, take care.